Natural gas prices face renewed heavy losses as geopolitical tensions ease, but can a hotter summer keep them elevated? Hello and welcome back to our channel. My name is Daniela Hathorn, and in today's video we are going to be looking at natural gas. It's been a while since we've done a video on nat gas, so we'll take a look at some of the fundamental developments and also jump on the chart to see how it's been evolving. But before we get into it, please like this video, comment, subscribe, and turn on your notifications. So as I was saying, natural gas prices are selling off heavily once again. It started at the turn of this new week, especially on Tuesday. We saw those sell-offs intensifying, led on by the pullback yesterday on Wednesday. A lot of this having to do with those tensions that escalated during the weekend in Russia. In resurrection seem to have eased. And that has helped also ease concerns about the supply of Russian gas. So that has removed some of the bullish drive that we've seen over the last few days in energy prices. And that has meant that natural gas has fallen about 7 or 8% in the last 2 days. Now, we've also got month-end rebalancing happening now. A big part of that sell-off on Tuesday also having to do with those option contract expiring. So we've seen some volatility in the market because of that as well. And something else to keep an eye out is, of course, the weather. As we know, milder temperatures throughout the winter was what kept gas prices subdued. And we saw those heavy sell-offs because of less need for demand to heat houses. Well, of course, the same happens in summer. With hotter prices, there is more need to use air conditioning, and that can push up prices and push up demand. Now, we have seen a start of a hotter summer so far that may have propped up demand a little bit, but there are expectations that temperatures could be a little bit milder in the coming weeks, which could reduce some of that demand and therefore weigh on prices. But also, it's important to know that the consumption of natural gas is still well below the 5-year average. And of course, some industries have struggled to switch to nat gas consumption despite lower prices over the last year. Also, with prospects of a recession, we may have consumers also spending less on energy and cost cutting, which of course will weigh on demand as well. So that is something to keep an eye out on the demand side. Also for supply, there's been reports of maintenance outages at one of Norway's biggest export plants. Norway has become Europe's biggest supplier since moving away from Russia. So one of their export terminals is undergoing maintenance, which has reduced the supply. But also there's news that a Dutch gas field will cease production completely as of October, which could put some further upward pressure on prices because of that reduced supply. So on the supply side, as I said, easing tensions in Russia weighing a little bit on prices, but that is outweighed by those outages in Norway. With regards to demand, as I mentioned, of course, keep an eye out for those temperatures in Europe and the US, how they evolved. If we do see a hotter summer, are we going to see households using more natural gas to cool their houses? Also, look out for storage levels, because given or barring any surprises, if we continue at this rate, European gas storages could be at the European Commission's target of 90% by the end of the summer, which could put further downside pressure on prices, as that would, of course, reduce demand later on. So it looks like so far the downward pressure could continue in the short term. We are in somewhat of a summer lull, which is quite common. We see some sideways consolidation. So let's jump onto the chart now to see how it's been trading. Okay, so here we have it, the natural gas daily chart, Capital.com via TradingView. And as you can see here on the last few days, we've seen that sell-off just around 5% yesterday and 2.3% on Tuesday when we saw that sell-off start. We saw that reversal pattern here on Monday. But if you're looking at the RSI, we could have started to predict the potentially a turning here. As you can see, the RSI had failed to really see a new high between the 19th of June and the high on the 26th of June. Whereas if we're looking at price behavior, we saw that the 26th of June high was much higher than the one that we saw on the 19th. So essentially, we were seeing a bearish divergence here. We were seeing a higher high in price and failing to follow that in the RSI. So that was suggesting that the price was starting to be overbought, extending a little bit too far. And of course, we have seen that correction ensued and followed. Looking at the RSI now, it seems to have found a little bit of a bottom here. But as you can see, we've seen a lower low in price, but we haven't quite seen that lower low. So we've seen that lower low in the RSI, but we haven't seen that in price yet. So a little bit of support seems to be arising there so far today, struggling to find any momentum. As you can see, that very small green candlestick up about 0.3% so far. As I said, struggling to determine that direction, finding a little bit of support there. And I think one of the things to keep an eye out is so far we've held above the 2.5 mark. As you can see here, even on that pullback on the 20th of June, we still managed to hold above that area, which is this dotted line here, which is also above the moving averages. So yes, we could see some further pullbacks coming, but it looks like there's a good amount of support so far, at least in the short term. I think if we break below 2.5 and also start to get closer to this confluence of moving averages here, then we could potentially start to see this trend weakening further. But for now, it looks like the sell-off is slightly contained, attempting to form some kind of a rebound. But of course, buyers will need to watch out towards this area of resistance just around that $3 mark here. As you can see, this is also the highs that we saw back here on the 3rd of March when we attempted to break away from this key area of resistance. Didn't quite manage that, reversed. Also, because of that 50-day moving average, we've now cleared that as with the 120. So only the 200-day moving average currently left above the price, which suggests some resistance in the future. But for now, we could have a clear path to attempt to break higher. As I said, that demand and supply off play is going to be very key, especially with the development of tensions in Russia. Also, with regards to supply coming from Norway and the Netherlands, and also how much households and industries are going to need throughout the summer months and how European gas storage levels are going to evolve. So for now, it looks like we could see a little bit of a rebound, the RSI pointing towards that with a potentially bullish divergence there. Still above 2.5, holding above those moving averages, looking to go back towards that $3 mark where we're likely to see some further resistance. That is it for today's analysis on natural gas. Thank you so much for watching, and don't forget to subscribe to our channel.